This week is stacked with red folder economic reports, inflation, labor, and consumer data all hitting the tape. And these numbers won't just move bonds, they'll decide where Nasdaq trades next. Welcome back to the Rob Report, where money meets news. Let's break down this week's key reports and what they mean for the markets. September 10th. Core PPI came in last month at 0.3%, and it's forecasted to stay the same at 0.3%. This tracks producer costs without food and energy. If the number comes in hot, it means inflation pressure is building before it even reaches consumers, and that's bearish for growth stocks like Nasdaq. But if it's softer than expected, it's a relief rally for tech. On the flip side, we'll also be looking at the headline number, PPI month over month. The headline PPI was 0.9% last time, and it's forecast to remain the same at 0.9%. This one includes food and energy, so it's more volatile. If we see another big spike here, markets will worry that energy costs are fueling broader inflation, which pressures the Fed and weighs on Nasdaq. But if it cools down, that takes pressure off the Fed and it gives tech stocks more room to run. September 11th. Next up is the big one, CPI. Core CPI, the Fed's favorite gauge, was 0.3% last month, and it's forecasted to stay the same at 0.3% again. This strips out food and energy and shows us the underlying inflation trend. If this number pops higher, bonds yields climb and tech stocks get hit. But if it comes in light, Nasdaq gets a nice tailwind. Alongside that, we'll also get headline CPI month over month. Headline CPI was 0.2% last time, and this month it's forecasted at 0.3. This shows how fast prices are moving compared to last month. If inflation is accelerating, that's negative for stocks. But if it stays calm, Nasdaq can rally. Traders will be watching the year-over-year CPI. Year-over-year CPI was running at 2.7%, and it's forecasted at 2.9%. This is the headline number that everyone looks at. It shows the long-term inflation trend. If it keeps rising, the Fed leans hawkish, and that's bearish for tech. But if it drops back, traders will see it as proof that inflation is cooling, and Nasdaq reacts positively. Shifting gears, the same morning we also get weekly unemployment claims. Jobless claims came in at 237,000 last week, with a forecast of 235,000 this time. If the numbers come in higher, it signals a cooling labor market, which actually eases inflation fears and can boost the Nasdaq. But if claims are low, it shows that the job market is still tight, raising the risk of wage inflation, and that tends to weigh on growth stocks. September 12th. To wrap up the week, Friday brings the University of Michigan's consumer reports. Consumer sentiment scored 58.2 last month, and the forecast is flat at 58.2 again. This measures how confident households feel about the economy. Strong confidence keeps spending up, but it also means inflation risk sticks around, which is bearish for tech. Weak confidence means demand is cooling, and that can give Nasdaq a boost. Alongside sentiments, we'll also get inflation expectations surveyed. Inflation expectations were at 4.8%, and they'll be expected to remain at 4.8%. This is where consumers think prices are heading. The Fed pays close attention. If expectations climb, the Fed has to stay aggressive, and that's negative for growth. But if expectations fall, it eases pressures on the Fed, and that's bullish for Nasdaq. So here's the playbook. PPI sets the stage midweek. CPI is the main event on Thursday. Unemployment claims adds context, and the Michigan's report closes things out on Friday. Put it all together, and this is shaping up to be a volatile week for the Nasdaq. Stay sharp and trade smart. For traders, the setup is clear. Volatility spikes around these red folder events, so patience is key. The strategy here is to wait for the data and then trade the reaction, not the guess. If CPI comes in hot, expect yields to jump and the Nasdaq to sell off. Sure, the setup can line up quickly. If CPI cools, look for a relief rally and momentum trades to the upside. Unemployment claims and Michigan sentiments are secondary. They confirm the tone, but they won't override CPI. Bottom line, stay light before reports. Be ready to react after the release and manage risk tightly. These are the weeks where one number can flip the markets in minutes. And that wraps up our economic red folders for the week. You've been watching the Rod Report, where money meets news. Don't forget to like, comment, and subscribe so you stay up to date with news that shapes not only the market, but your wallet. And as always, thank you for watching, and I'll see you in the next report.